Hey, what's going on, everybody? It's your girl Justice, and I'm back today with another video. I hope you all's day has been going well so far. Today's video, I just wanted to share a quick strategy that I've been looking at here recently. It's one that I've been back testing for quite some time now, and I found that this strategy has been working for me. Not all the time, but a good majority of the time the strategy has played out in my favor, and I just thought it would be a good idea to share it with you all to see if anyone could possibly take from or learn anything from this strategy. So without further ado, we're just going to go ahead and get right into this video. I already have the charts pulled up for you all. So right now I'm currently on a NASDAQ, and I am on a daily time frame. And the first thing that I would like to do when it comes to this strategy is I like to find 3 consecutive candles, and once I've found those daily candles on the daily time frame, what I like to specifically look for is for the second candle to be for its wicks to be either higher or lower than the first and the third candle. So as you can see here, I already have it marked out for you all, just for the first example that I'm going to show you all. You can see the second candle's wick is higher. I'm sorry, you can see the second candle's wick is higher than both the first and the third candle. So it doesn't always have to be higher. Like I said, it can be either higher or lower, but obviously for this example, this candle is higher, so that's number 1 for me. And once I have that, the next thing that I like to do is mark out the third candle's swing low. So again, for this scenario, since the wick is higher than the first and the third candle, then I'm going to look for the third candle's swing low, and vice versa. If the second candle's wick is lower than the first and the third candle, then I will be looking for the third candle swing high. But again, since the second candle's wick is higher than the first and the third candle, then I will be looking for the swing low on the third candle. And so I already have that marked out. And the reason why I have that marked out is because for me, that could potentially be a draw on liquidity. It could be an area to where price could go to mitigate or to take out liquidity, or just overall, like I said, where price could be drawn to. Again, this doesn't happen 100% of the time, but like I had mentioned before, this strategy has worked a lot for me. So like once I have the third candle's wick marked out, the next thing that I like to do is mark out the opening price of the following candle, so the fourth candle. So wherever that price is open, wherever the body of that candle, where it opens at, is where I would like to have that marked out. And as you can see, I have it marked right here. And so far, like I said, we're on the daily time frame, and I have the third candle's swing low marked, because again, that could be a potential draw on liquidity or price area where price could possibly be drawn to. So I have that marked out, and I also have the fourth candle's opening price marked out. And that's pretty much it for the daily time frame. Now, once I have those marked out, then I would I will go down to a 15-minute chart, and then a 5-minute chart or a 1-minute chart for my entries. But for now, I'm just going to go down to a 15-minute chart, and it's totally up to you. I know some people do like to take entries on a 5-minute or 1-minute or even a 15-minute. Just totally depends on what type of trader or how comfortable you are. But for now, I'm just going to go down to the 15-minute chart. And so now that I'm here, what I'm wanting again is I'm wanting for price to be drawn down to that line where we marked out on the daily chart, which is that third candle again right here. And so I'm just going to go back to the 15-minute real quick. And so before I take any sort of entry, what I'm looking for on the 15-minute is some sort of confluence or something to tell me that price could be potentially going to this area, whether that's it maybe manipulating, going out and taking out this liquidity right here, or sometimes because price won't do that all majority of the time. Sometimes price will just completely go in the other direction before taking out any liquidity, but a lot of times it does. But it just, you have to go off of what the market gives you, and that's what I'm coming to realize is I'm trying to react off of what price is giving me, as opposed to predicting what price could be getting ready to do. So like I said before, I'm just waiting to see some sort of confluence that will give me an entry to get in for a short here. And so far what I'm looking at is I see this draw of this liquidity right here that possibly could be taken out. And so I'm just going to hit play. And I'm just going to wait for price to give me something. And so for me, just going back here, I see where there was a fair value gap that was formed right here. And so I would mark that out. And then price currently right now, it has went down and it's came back into this fair value gap. And I will possibly be looking for a entry somewhere around this area. Now, if price was to continue to just go up, then I wouldn't take this trade, because again, I will be looking for price. My overall bias is for price to sell. So I'm just going to hit play and see what price does next. And as you can see right here, this is the area where I would possibly be in for a short. Another confirmation for me is that I will be taking this short in a premium instead of a discount. So I'm up here in this area and I'm not too low. So currently I will be in this trade right here, and I'm just going to hit play and see how price plays out and see if we were right. Like I said, my take profit again would be this area down here, and then as far as my stop, it would be somewhere right above this wick right here, or I might even go a little bit above, because I wouldn't want to have my stop loss too short to where I would possibly get taken, or price could go up and wick and take me out and then eventually go in my favor. But let's just see what price wants to do here. And as you can see, this was a pretty decent trade. I mean, it played out into my favor. Like I said, I went on the daily time frame first, and we marked out the third candle's swing low, and we also marked out the fourth candle, the candle after that, the fourth candle's opening. And then since my bias was overall for sales, I then went down to the 15-minute time frame, and I was just waited for price to show me some confluence for me to get in. And again, for me, I saw where this fair value gap had formed. Price was pretty much just consolidating or going in one area for throughout this area right here. And so once I saw where this fair value gap was formed right here, and where we had price had tapped back into that fair value gap and it started wicking out, for me that was just confirmation for me to get into the sale right here. So that's just one example. I'm gonna show you another one real quick. I don't want to make this video too long, but I just want to show you another example real quick, so that way you can get kind of the gist of what I'm trying to explain here. So we're gonna go over to ES, and just mark all of that. So we're going to go over the ES, and I'm just looking for, again, that same scenario, so to speak, that I found on the first example. So let's see. Just going to go back here. Oh, sorry. So first I need to get on the daily. Oh, here it is. Okay, so we're on the daily, and I found those three candles again that I had mentioned to you before. Now, on the first example, we had a swing. The second candle was pretty much like it was higher than the first and the third. On this one, this candle is lower than the first and the third candle. So again, what I want to do is go in again on the daily time frame and mark out the third candle's swing high, since again the second candle is lower than all of since the second candle is lower than both the first and the third candle. I hope this is making sense to you all. So as you can see, I have the third candle wick right here. I have that marked out, and then the next thing again that I would like to do, that I usually do after this, is I marked out the fourth candle's opening, which is right here. So again, so far we're on the daily time frame. We have our three consecutive candles right here, where we have the second one where it's lower than both the first and the third one. We have the third candle's wick. The third candle's high marked out, and we have the fourth candle's opening marked out. So once we have that, the next thing that I would like to do is go in and look at and go down to the 15-minute time frame. Okay, again, we have that high marked out, and we have the opening of that fourth candle marked out. So what I want to do from here is just wait to see what price wants to do. I'm just going to hit play and wait for some sort of sign to let me for the market to let me know what direction it wants to go towards. Now, since again we started on the daily time frame, and I will be hoping for price to go up and take out this area right here. But again, like I said, price could do what it wants to do always, and so I'm just gonna pretty much just go off of what the market gives me. So I'm just gonna hit play, and right here this candle would kind of not scare me, but this candle has a this was pretty much like a big candle right here. So I would just hit play again to see what price wants to do. Right now price is just creating just price action is just moving, and so right here will be an area that I will be looking at, because not only did it shoot up and it just completely took out where we had marked our drawn liquidity, but I'm waiting to see if price is going to possibly come back or if it's going to go up. But since this price has already taken out all of this area right here, what I would then do is possibly look for some sort of buy. Now, just starting off, okay, I see where there's a gap right here, and I will hope for price to maybe revisit this gap. But again, price could always do like whatever it wants to do. So if price revisits this gap, then that's great for me, and I will want to get in. But again, I would still want to be cautious here, because price could just potentially just take off and go without me. So now that I pretty much have a possible entry, the next thing that I will be looking at is where I could get out of the market, or get out of this trade. And just looking at this, I see where price has pretty much rebalanced this. I would be possibly looking for price to go somewhere up in here, definitely to take out this liquidity right here, and possibly this one right here. But just to be for sure, I'm just definitely gonna go right here. Yeah, for sure. So I would pull out my, well, not yet. So before I do that, I'm just gonna hit play real quick, and I'm gonna see if price comes back and it revisits that fair value gap. Okay, yeah, that's probably it. And that's where I'll be looking to possibly target. So I'm just gonna hit play. So it did come back and it tapped into that fair value gap. I'm gonna wait again to see. Once I see where it has tapped into that that gap right there again, then I will definitely be in for a buy. Again, as you can see, my this is where I would get out, around this area. And as far as my stop loss, again, I don't want it to be too tight, but I don't, want to leave too much on the table to where I'm risking. So I would probably put it in right about there, below this wick right here. Okay, so now I'm just gonna hit play and see if price goes into my favor, or if price treats this fair value gap as an inversion and goes the other way. So I'm just gonna hit play and see what happens. So I'm gonna draw this out and see. So as you can see right there, I am out of the trade. Price did knock me out, but I'm just gonna hit play again because I do still have faith and I still believe in this trade. I do feel like it's still gonna go up. At first I was gonna put my stop loss at least about right here, but that's okay. I'm not gonna be able to win them all. So let's just see if price continues to go in my favor and see if I was just early in this trade. And as you can see, I think that is what happened. I was definitely too early in this trade, but I did overall have the right bias. So yeah, and that happens, but I just have to be okay with that, and move on to the go back and see where I was wrong and move on to the next trade. But as you can tell, price did eventually go in my favor. But I was just a little bit too early in this trade. So I hope you all, yeah, I should have at least had my stop loss about right there. So that's what I was saying. Making sure that your stop loss is not too tight, but definitely, you know, giving yourself enough breathing room for you to still be into the trade. Because if I would have went with my first initial thought, which was to have this stop loss right down here, which is now going back and look at it, I don't understand why I wouldn't have had that like that, but especially with all of this open space right here. But that's fine. I know for next time, like I said, price did eventually go in my favor. So leave your thoughts down below in the comment section below. But other than that, I hope you all have a great rest of your day, and definitely look forward to seeing you all in the next video. So peace.